Hi, and welcome to our Founders Question Slot, where we dig into the real challenges founders face. Today, I'm with Ian from Focus 15, so let's get to it. Hi, Ian. Here's a question that came in from Marcus in Bristol, and it's one we've heard quite a bit lately. Do I need AI to get investment?
It's a good question, and with AI capturing around 50% of all global VC funding in 2025, and that number is only rising, I can see why you'd ask. And I suppose it's why virtually every man and his dog is currently jumping on the AI bandwagon in some way, shape, or form. To answer the question, though, it might be helpful to split it into two groups for investors. Firstly, we have institutional investors, so VCs or private equity, and then we've got angels. So most VCs follow the power law approach, which basically means they are focusing on finding really, really big winners with an understanding or a slight acceptance that most of their portfolio is ultimately going to fail or not deliver the right returns. And right now, AI is getting all the headlines. It's the next big thing. It's where all the big winners appear to be. And a lot of institutional investors struggle to look past that. Investing does contain a lot of FOMO. If that's where other investors are putting their money, then some investors feel, or some people feel, that's where they need to be. I'm not actually sure that some of them really understand what AI is or what it actually is they're really investing in. And I suspect a lot of them are probably going to lose quite heavily, especially when when the investors sort of behind the large language models start to decide that they actually need to start making a return. You may have seen many senior economists recently talking about the possibility of an AI bubble in the stock markets. And their point stems from the fact that the underlying valuation fundamentals simply don't exist. It is, it's currently all speculation. Now, some people draw parallels with the dot-com bubble, but I think that's probably this is slightly different because of the size of the companies and the absolutely enormous quantities of money that's already been invested in them. I kind of feel that this time we're in a situation where some of these companies are actually too big to fail. So it's going to be really interesting to see what happens over the next couple of years in this. And whilst that remains the case, I suspect institutional investors, though, are going to continue to favour it. Angels, on the other hand, tend to concentrate more on business sectors that they understand or know or have experience in. Not exclusively. Many will chase AI because it's the latest trend and they feel it's where they'll find the best returns and the big winners. But they are likely to be a little bit more open to other businesses rather than just AI.
So are you saying you can get investment without AI?
Yes, you can absolutely still get investment without your business using AI. The problem is that the amount of investment being directed towards non-AI businesses is reducing every single year, and that's likely to continue. And with more founders chasing a smaller pot, it means that if you want to get investment, your proposition needs to be far more compelling, and that's getting increasingly hard. And this can be seen by the growing investment gap between pre-seed and seed. In the last couple of years, the amount or the number of transactions in the pre-seed area has increased, whilst at the same time the number at seed has actually fallen. And that's not a healthy balance, because when the ecosystem loses balance, it generally means that more companies are going to fail, and ultimately there will be greater losses for investors, even though ironically they're partially responsible for the situation arising in the first place, or that imbalance being there in the first place.
But should a founder consider using AI?
There are a couple of points here, I think. Firstly, only add AI if it genuinely improves the product or the business. If AI helps you to do more for less or improve the benefits and value to customers, then by all means explore it. But if it doesn't, if it doesn't make the customer experience any better, it's not adding value, so don't bother. The reality right now is that a lot of AI use is pretty poor. You've got chatbots everywhere. I haven't come across a single one in the last few months that hasn't left me just wanting to throw my PC out of the window. I mean, it's so frustrating. AI phone responders are even worse. I mean, phoning up insurance companies to say, I need to cancel my policy because I've sold the car. And that comes back when they come back to you and they say, you'd like to cancel your apology because you've stolen a car. It's maddening. Forcing poor quality AI into your product just to say you've got AI can actually damage your credibility and reputation. It's just not worth doing.
But what if competitors are using AI?
I think to some extent that depends how and why they're using it. I was at a board meeting recently and one of the directors was saying how another company he was involved with were using AI to generate marketing content. So they were doing blogs, posts, emails, things like that. Apparently they were producing twice as much content with half the number of people. It sounds great. Why wouldn't you want to do that? But the problem is everyone else is doing the same thing. So over 70% of organisations now use AI for content creation. And that has meant that the volume of content published, let's say last year, has doubled. And the result is basically stagnation. Too much content, too many posts, too many emails. And whilst volume is increasing, engagement is actually falling. So social media engagement rates on average are reportedly down around 30%, which is huge. And they're not failing just because of saturation, but also because of lack of differentiation. Sort of logically, if everyone's using the same tools to generate content, there's a strong chance that everybody's content will be the same or very similar. More isn't always better. But what choice do you have? If your competitors are doing it, then do you have to do the same or risk having no voice at all? And that's absolutely valid. You need to be heard. And having to continually find ways to achieve that. And right now, most companies are actually going down the volume route. So it's understandable that you would do the same. I imagine in a few years' time, we'll look back and realise that using AI for content creation actually did very little to help or benefit most companies. In fact, the only winners, I imagine, will be the LLMs themselves. And that brings me on to my other point. It's really important to think about the long-term strategies and implications of using AI. Right now, it's low cost, and it reminds me very much of how Amazon burst onto the scenes. For those first suppliers, those early years, it was great. Low-cost ways to reach absolutely huge audiences. But ask most suppliers now, and they'll tell a very, very different tale. Simply, look at the stock market. You can see who the winner is. Over time, costs will rise. That's inevitable. And if you become reliant on a supplier, and let's face it, there aren't going to be many LLMs around in the world because the cost is so great to get there. So if you become reliant on one of the very few, you're exposed to those increases. That's not to say don't do it. Just understand what the future might look like for your business.
So what's your final message for founders?
I suppose when it comes to raising money, I'd always say focus on how you can create the most value for your customers, and ultimately that will flow through to investors. If that involves AI, then so be it. But don't simply follow trends or pretend to be something that you're not. Using AI to get through the door with investors with nothing to back it up will only see the door close fairly quickly in your face. That just wastes time for everybody, so don't do it. And if you come across investors who are only interested in AI first businesses, that's fine. Just move on. If it's not for you, just move on. Don't waste your time. And at Focus 15, we have plenty of investor partners whose mapping tells us they don't only look at AI, so they are out there.
That's all for this edition of Founders Questions, and thanks to Ian for sharing his insights. Don't forget, if you have any questions you'd like answering, just pop them in the comments, and we'll do our best to bring you the answers in a future recording. In the meantime, stay focused and see you soon.